Hello and welcome to another episode of our From the Helm series live here in Brisbane for our Resources Rising Stars conference. I'm Grady Wolf, market analyst with Bell Direct, and another familiar face here today, Marc Ducler, our Astral Resources Managing Director. Thanks for joining us again today.
Cheers, thanks very much for having us on, Grady.
Great time to be in gold.
Yeah, no, current gold price, it's fantastic.
Absolutely.
It's hard to keep up, really.
Can you give us an update over the past few months, what's been happening at Astral?
Yeah, well, we actually had a pretty busy Christmas and New Year period, so it really interrupted my fishing and drinking, which has been a bit of a shame.
Unlucky summer for you.
But yeah, we launched a takeover for Maximus Resources. They're our neighbour to the immediate west, so that's kept us busy, and we're obviously also advancing the pre-feasibility for Mandilla.
Yes, absolutely. So you've actually been attracting a lot of institutional investment recently, and investors are really liking what they're seeing. What do you attribute this to?
Look, I think we've been in gold at Mandilla and Astral more broadly since 2020, and gold was sexy in 2020. It was decidedly...
It's even sexier now.
Yeah, but it was decidedly unsexy in 21, 22 and 23. So
yeah.
we did struggle to attract investment because the money wasn't there. And so you go slower than you ideally would like to.
Yeah.
That certainly started to change last year. The instos started getting interested. We've got research with both Canaccord and Euros now.
That's huge.
Which has driven that institutional interest, which led us to having a really successful raise in September of last year. Mm-hmm. And that sees us today with $25 million cash in the bank and 23% institutional holding. So we're well prepared to move forward.
Done very well there, well done. We finished 2024 on a high. Now, a pre-feasibility study on the 1.27 million ounce Mandilla project is due by mid-year. What are the broad parameters of this study following the scoping study from 2023?
Yeah, so the scoping study from 2023, we used $2,100 Aussie to do the pit designs. And
very different to now, right?
Yeah, and $2,750 for revenue, which at the time was about 90% of spot. Mm-hmm. So if we stuck with 90% of spot, we'd probably be running a revenue case at $4,100.
Yeah.
The design scenario will probably be sitting somewhere between $2,600 and $3,000 Australian. So still really conservative compared to spot. And that'll probably see us moving a production target from 870,000 ounces, I think, at scoping, to probably in excess of 1.2 million ounces.
Wow.
So it'll be a significant move upward from that perspective.
So will the PFS include the Fayetteville project near Kalgoorlie, and can you explain how this fits into your production plans?
Yes, so the short answer is yes. I'd imagine we've got 196,000 ounces at Fayetteville. We'll probably mine 150,000 ounces of that. Yeah. But it's 1.3 grams per tonne. It's 6-to-1 strip ratio. So that is very profitable, trucking that, 65 kilometres from Fayetteville to Mandilla to put it into a large-scale, low-cost process plant. So it will add a lot of value. Yeah,
now talking back to Maximus takeover, will you include those assets in the PFS for 2025 as well? And what was the strategic thought behind the acquisition?
Short answer is no. The ounces from Maximus tenure won't come into the pre-fees. That'll be there as upside for the DFS on the basis that we have a successful outcome. I mean, the transaction's only a week old. We're already at 40%. I expect it to move through reasonably well, but it is M&A and...
which is a hot topic right now.
Yeah, and a publicly listed company, I mean, effectively it's a voting machine.
It is.
Those shareholders can either vote to come into the deal or not, and they vote by putting their shares into the offer.
Yeah.
The strategic rationale for us is by the time we finish mining Mandilla, we would have been mining for 10 years, processing for 15, and the infrastructure that we need to put on the ground will take up a vast chunk of the 27 square kilometres of tenure we have at Mandilla.
Yeah.
And Maximus brings us another 120 odd Ks of tenure. So it's a 400% increase. We go to a tenement package of 144 square kilometres there. And that gives us optionality for the future. And so it makes a lot of sense for both sets of shareholders.
Now, what can our investors expect as catalysts on the news flow side this year?
Well, we're working on the mineral resource estimate for Mandilla at the moment. So that'll be out later this month. We are committed to delivering the pre-fees in the June quarter. And it's really well advanced. So I've already got the operating costs for the process plant come through. There's a 13% movement up in OPEX cost for processing. But September 23 to where we are today, I'm not disappointed with that sort of a movement, given that the gold price is up 50%,
Yeah.
we can afford it. But more importantly, mining, we're at $11.60 per BCM for scoping, and the RFQs, the request for quotation from the mining contractors are coming in, demonstrating they're actually going to trend lower than that. So given how much positive price movement there's been in the gold, with the gold price,
Yeah.
my mining costs are coming off, moderate increase in processing. The pre-fees is going to be a cracker when it comes out
The
in
margin expansion looks pretty
June.
good.
It'll be amazing. It'll be truly
Marc,
amazing.
thank you for your time today. It's always a good time to be in gold, and Astral Resources obviously on our radar this year. Thanks for joining us from the helm.